Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. It is May 5th. This will be our chart lesson for the day. And in the end, this is just a big trading range. You can see we had a leg up, a leg down, a leg up, and another leg down, and there was a lot of congestion in between on the way down and the way up, really. This was a pretty good move up. It was hard to there's several trades in here, but you had to really, most of them are more advanced. We'll talk about them when we get to them. There's a lot of green ones today too that were just trades that set up that meet our criteria, but there were just some reasons that they were a little bit aggressive. So I'll talk about those when we get to them too. But there's quite a few trades here, but clearly a range day. Somebody sent me or made a comment on the website that they saw a three-tiered range. Maybe you could find that in here, but really this is just a range with your lows are down here at the overnight lows and your highs are up here, and we had a little failed break lower, failed break higher, but most all your trading, you can see the midline in there, prices playing it both ways. So this is the way I see it. Um, you know, maybe you could find three tiers in there that still look very similar to this. If you do, there's nothing wrong with that. As long as it gets you to the same place, then everything should be good. But anyway, I'm going to zoom in here. We'll get started on the trades and go from there. And you can clearly see early on there's a two-tiered channel working up here. We got a break, two legs to a new high, and then we turn down. Perfect price action, really. But 7 o'clock came just as we're coming back up to this high, and you got a failed breakout. This is a very tempting trade, but generally you want to wait on a lower high. And there's also there's a hidden second entry in there. Notice the leg up, we come back, we go higher. So that is a hidden second entry there. And what that means, if you just went to a little slightly smaller chart, you'd see a clear second entry. It's a little more advanced. So if it doesn't make sense to you, don't spend a lot of time with it. And please don't send me a bunch of emails on it. If you don't understand that yet, it's just too advanced for you. Don't even worry about it. Technically on this chart, it's just a first entry. So, but it is a failed breakout. So there's different reasons to maybe like that trade. So if you took it, I wouldn't beat you up, but because you do have a break and a new high, and it is a failed breakout here, so it's probably going to pull back at least to test this. So that would be the key. Do you have enough room to test the breakout area? And if you do, then maybe you could go ahead and take that short. But I think you're better off to still wait on longs. And notice we have a leg down. You get a first entry, and then this breaks lower first and turns up. So when it went higher there, that's a second entry long. You could just wait for this bar and go long above it. And if you really want to be safe, you wait a few minutes and you get a failed second entry short that breaks here and turns and runs right out the other side of that bar. When you see when it ticks down one tick and instantly reverses and goes right out the other side, you're trapped. Guaranteed you're trapped. People trying to pick tops here. And you can see how that rockets, when that breaks higher right there, it rockets straight up. It closes on its high, opens, and keeps going. And that's a sure sign of a trap. And so that was a great long trap right there. It's a failed second entry short. And I'm going to say this again. I'm just going to say it right now. I get 2 or 3 emails, sometimes 4 a day, people asking me why a failed second entry failed. Look, if you're not a very seasoned chart reader, don't trade failures because most of you don't understand them. You're not good enough chart reader. I don't mean that ugly or trying to, talk down to anybody, but they are for seasoned traders that are pretty good chart readers, actually fairly skilled chart readers. And 90% of you aren't skilled enough to be trading second entry. So if you get a failed second entry that fails, you don't have to send me an email why it failed. It failed because you misread it. You got trapped. You got fooled. So if you see what you think is a failed second entry and you take it and it fails, there's no sense in wasting your time or my time because all I'm going to do is tell you it wasn't a good setup and you misread it and it failed, because that's all it is. You got trapped. So don't try to trade these unless if you're sim trading and you want to try to trade them away, but don't send me an email please, and I'm not being, again, I don't mind anybody sending me an email for something legitimate that they need help with. But if you're asking for help with failures, I've told you don't try to take them because the reason they're failing is you're not reading it right, and you're wrong. You're just wrong, and you're getting trapped, and that happens quite a bit. I get them. It gets frustrating for me because people want to know why a failure failed, and because it wasn't a setup for a failure. You just got trapped, and usually it's in congestion. And even this one looks a little congested, but the fact that it broke lower, this is an uptrend though, and I took it with the bias. Most of the time you're trying to pick reversals and you're trying to go the other way and you just get trapped. So now you've had a break and 2 legs up. You made a high, you basically made a double top, then you made a first entry, then you pushed through the EMA and pulled back and tested it, also confirmed this trend line. And actually this trend line is a little different than what I have it drawn here. It's more like that right there. You don't really get a break right here. It looks like it was a break the way I had it drawn, but I don't believe there's a break there. I think you get an overshoot. I mean, you actually push outside, but there's no close outside. But you get an overshoot, and you still get another leg down. There's a bigger trend line up here is what it is. So anyway, that's a failure. That's what a reversal looks like. If you're looking for a reversal downward, it's going to be on the underside of the EMA. And if you're looking for a reversal upward, it's going to be on the high side of the EMA. I had a guy take a trade that it's moving up. It might have been right here, in fact. First entry, second entry, and it failed. And they're going long right into that EMA. You just don't do that. See what happens? I mean, here it ended up would have worked, but there's a good chance you get stopped out. So that's not where it was. I'm not sure where he took that trade. But I got several emails, not just that one trader. So I'm not picking on you or anything. If you're watching the video, and don't take this the wrong way, I'm not trying to discourage you from learning or anything, but there's just there's no reason for somebody that doesn't understand what a failure is and how they should look to even be taking them and then wondering why they failed. If you don't understand that to go long on a failure, you need to be above the EMA, or to go short on a failure, you need to be below the EMA, then you don't need to be trading them. It's just a simple fact. So, but anyway, great short right there. It took it a minute to take off. Unfortunately, you probably don't get a runner here, but still a good trade. And it drops on down here. Get a big move down. It's too bad we couldn't get a part of that, but that's the way it goes sometimes. And then notice right here, there's a first entry and then a second entry. And so when it breaks higher, there's a chance that's a failure, but it's below the EMA, and that's not what a failure looks like. So you can't go long right there, and look what happens. It comes back. But if you're just patient, it does give you a first entry, second entry. I didn't mark this one because it looks too much like congestion. And so there's a good chance that you might break a tick or two higher and turn down. But that's a second entry long right there. And if you were going to trade that trade, that's a better entry than trying to trade the failure right here. So the one time you might take a failure is if prices are way down here, this far away from the EMA, and you get a failure, and you got a lot of room back. Like, see how much room is back to here? This is one, if you want to be an aggressive trader, you might take this long. Look at that big signal bar. Usually you're better off to wait on the high or low, and you get that here, but this is not a good setup. So there's no good trade there. And you want the reversal on the failure to be above it, so really not a good trade there either. If you want to be really, really aggressive, this would be the best place to enter, and you get a chance to maybe catch a low. I mean, we could have gone higher or whatever. But we work back up, we get a close outside, move to a new high, and where does it turn down? Right off that possible trend line. That's not enough to really confirm it. We do get a lower high right here, which you might have considered. Again, you could argue for this one to be at least green, because notice that you try to go, you've moved up here to the high, and this is just a lower high. It breaks higher and fails, and it's a big bearish bar. But you could also look at this as a first entry, second entry. Technically, it's not, because you don't have a new low in here yet. It's just really coming out of congestion. So I don't think it's a really good trade. There's a failed second entry long here, but again, it's too congestive. Uh, Really, what I like this trade because now you tried to go higher multiple times and you get a good signal bar. Uh, this is basically a double top right here. And so now you got what looks like two legs down. Here you don't have that. It just looks like sideways action. But notice you get a leg down, a move up, and another leg down, and then a move up. So now, look, counting that as a double top, that's a first entry, second entry. We're under the EMA now. We got a bearish bar. Lots of reasons to like that one. And it's really kind of tempting to even enter below this one. Looking at this as a triple top and two legs down, but you really would expect the prices to gone on lower by this point. The fact that they didn't, and we're going sideways again, I just don't think it's worth taking. It works, turns out to be actually a pretty good entry, but I don't think it's worth taking. And another thing you would have wanted to do was measure this leg down and look for a measured leg. And so we go much further than that, obviously, but that would have been another reason to like trying to find an entry right in here. And again, you could argue for this one to be green. I'll go ahead and mark it. But just the fact that it didn't take off yet was really concerning to me. So anyway, we drop on down. Now it takes on off. That's what you would have expected it to do a little sooner than that. So it showed that there was still some buying coming in there, which makes it questionable. But we are making lower highs and lower lows, so it is a downward trend. So if you took that trade, I'm okay with it. We drop down here, and this is where some people got confused. It's way too early to be looking for a long down here, especially where we're just bouncing along. These were the overnight lows, as you can see. So this could be a range day. And when you're just bouncing along down here, there is a failed second entry short here that is way away from the EMA like I talked about. That might be the one time. And you can see when it broke higher that it had trapped all these shorts and they all have to exit and it runs up real quick. But I just think it's too early. This could just be temporary support because we do have a two-tiered blue channel and we could push on through there like we did. And it could have happened right here. That is not rejection. So this looks a little more like rejection, but it didn't go very far, and then we're just chopping along. But this is where one trader, I circled this because a trader sent me this, and what they did was they looked at this as a failed second entry long, which it is. First entry, second entry, and when it broke lower and failed and turned up, or actually when it broke up right here, they went short and went a few ticks, stopped them out, and then right where they thought it was going to go. There's a lot of reasons you don't want to be entering short right here, and that's the reason there's no short marked, because this could be a range day. And even if it's not, we just came off the lows of the trend channel. So where should prices be going? If it's a range, they're going to go higher. If it's a two-tiered channel, where are they probably going to go? They're probably going to go back to the other side. And the fact that you just got all that congestion, that's not a good sign. So really, it's hard to know what prices are doing here. They're just chopping sideways. There's really a channel here almost. You can see that. So if you see it like that, which is how you should see it, I mean, that changes everything. There's just no reason to go long right there at all. If anything, you might want to go short right here. So by trading these traps, you're just fooling. I mean, you're getting tricked. You're getting trapped, and that's what traps. That's what most good traps are. The reason they're great trades is because they trap people. Well, here they made it look like it was a failed second entry long and would go lower, but there's too many reasons not to go short because there's the strong support. Maybe there's enough room to get out right there, but I'm not going to risk a short right there. And there's definitely not enough room to go long into all that resistance, and this is congestive. even here was congestive. So there's just hard to know what prices are doing there. They're not going lower, they're not going higher, they're just kind of going sideways. So avoid those trades. And then we drop lower, we don't get to the trend trend channel line, and we reverse here. Now notice what we did. This was a failed break lower out of this channel. We can drag this on across here a little more. So it's a failed break lower, and it runs back in, it comes back and tests it once, and then it tries to go higher, and it pulls back and tests it again. So that's a higher low, a double test at support, and it's a clear sideways trading range. So I like considering going long right there. It's a little aggressive, and it's not a perfect signal bar. That's another thing. There's a little bit of stem. I think it's close to being in the upper 1/3. So it's a little aggressive, but we're probably going to make another leg up right there, and we're probably going back up to the upper side of the trend to test the trend line. That's exactly where prices go. In fact, they end up going much higher. So because it turns out this is a range day, and this was just a trend down, and the range is really taking over. So that's another reason to consider this when you get all that support, because generally you won't see that much support for that long in a true downtrend. You might go sideways all the way across to the other side to the trend line, but generally, even if it's going to be a weak move, it's going to slightly move higher and then hit the line and turn back down. So this was a little, when this broke lower and couldn't get to that trend channel, that's telling you there's a good chance we might get a break on the other side. And notice we got about an equal distance break. Turns out we're going even higher than that though. So anyway, you come up here and you get that break, and you think we're going lower, and what happens, this is a trap. You're not really looking to ride this all the way back to the top yet. You're just thinking, hey, I'd like to get a scalp here. If there's a trap, I can probably at least get a scalp, even if we're not going higher. And notice what prices do. They make this new low. Technically, this is not a new low, but it's a big move down. It's the biggest stem in this whole bunch. And then you try to go short once, and then you try to go short twice. And it's obvious that trend line's in play. It may only be temporary, but this is a spike in channel, and we could be reversing. So you might take that one, because if it breaks higher right there, guaranteed it's going to at least trap. It's going to run up real quick because of the trap traders that are going to exit. Again, it may not do anything but give you a scalp and turn back down, but I think it's worth trying that there. It's a little aggressive because this is a downtrend, but there's some clues here, as I've been talking about with the channel across here, not reaching the line. There's some clues here that say, hey, we may be going to reverse. And we run up, and then we start working sideways again. And you get a multiple test here with a nice signal bar. I made this one green because there's not enough room to get out. The only way you could trade this is let it break higher and drop a limit order a little further back, and then hope it backs up and fills you, and you get a better entry. And it is notice there's a double bottom here, and you try to go short once, twice, right at the key entry point. It's really mostly sideways, and we don't really look at failures and second entries. So, that's another reason that I made this one green. But it's right off that key entry point and the EMA, and they're running congruently, and that's usually a relatively strong entry. And you can see it didn't even check up here. It pushed right on through, pulled back, tested, it went up, came back and tried to test it again before it went higher. Now this time you do have a new low, and you get a first entry, second entry, and we've tested that same level there 3 times. Notice we tested it there. We came back and tested it there. We tested it there, and we tested there. But that's the trend line, this resistance that's now turned into support, and the EMA is all at your back. So, and this is a second entry long. Notice that high, first entry. And when it breaks higher there, it's a second entry. It's very congestive, but this is looking like a strong trend. When you start to see all these little small bars with lots of stems, and very shallow corrections, that's a strong trend. And so I like taking that one. And you actually have a double bottom there, so another first entry, second entry, and another chance to go long right at the key entry point. Basically a double test right there. You got the trend line, this support resistance line or support line, and then the EMA. And look at that signal bar. That's telling you, hey, we're going, we've corrected all we're going to correct, and the buyers are coming back, and we're ready to go higher again. And if you want to be safe, wait on the higher low, which comes right here. And this actually broke lower first and then went up, so it's a second entry long as well. And this thing rockets on up straight to the top. And you got to be careful going short up here, but watch what happens. You get the overshoot, you turn down at the overnight highs. First entry, you push through the EMA, pull back from underneath, and break higher. And then that fails and instantly turns down. That's what a reversal looks like. Notice we're under the underside, and look at it go. All these longs realize now, hey, I got to get out. We're going the other direction. And you run on down. You got a first entry there. No reason to go short there. No setup on the signal bar. And you're just getting too far away from the EMA here. We've got an overshoot, which obviously usually leads to a break, so it gives you a warning that break's coming. If you got a lower high there, yeah, but you don't get it. And we trade on down. And then we get an overshoot and reverse again. And I did want to point out too, make sure that you can see this. We didn't really break higher there, but notice once we got underneath, we tried to come back once, twice, and then we did break below down here. So really I would wait on this bar and just put your sell stop right there. And technically that's not a break high or so. By the count, it's not a failure. But when you get underneath there twice like that, and I mean, it's obviously confirming this trend line down through here. I like that trade. You might argue for that one to be green. It's real close because technically it doesn't. If you move that out of the way, you can see it doesn't really break higher than that bar. And generally, we prefer it to break higher. But you do get your overshoot, your close outside, two legs down, and then you reverse. And here you get another failed second entry, but it's below the EMA. You just can't go long right there. And you do push through here, pull back. Again, it's too congestive. Just no setups here. Technically, there's a double bottom right there. So you could look at that as a first entry, second entry. But again, look at all the congestion. You had a little overshoot here. I just think it's too risky. If you just wait a minute, then suddenly you get a second entry long right here. That's the first break. It's two legs down. Nice reversal type bar. Way away from the EMA. I like going long right there. It's a little aggressive, but your prices are going to pull back to that EMA most likely, and maybe come all the way back to here. And of course, that's where they end up. And then try to go short once, twice. Got a little double test here of this low. It actually breaks lower and turns up. The key here again is you probably can only enter this on an engulfing bar by going long right here. You can't wait to here to go long because you don't have any room to get out, but there's enough room. You actually have a tick to spare if you go long, one tick above that. So when it broke lower and failed and turned up and went out the other side, you could go long there. Other than that, we had a failed breakout up here. Again, this is getting late in the day. We've tried to breach that multiple times and finally did. And it didn't go very far and gives you that big bearish bar. Generally, you'd be better off to wait on a lower high here. But if you do, you don't get an entry. And if you want to be aggressive, I mean, I like that trade, I'll be honest with you. But sometimes it'll tick lower and push up one more time and then turn down. So you got to be careful with those. Same thing here. That's the reason they're both marked green. Technically, they're both second entries. This is basically a double bottom. So first, Uh, Actually, this wasn't a second entry because you got a first entry, second entry, and then so this is a new low, so that's just a first entry. But you can clearly see it looks like a couple of legs up there. You got two legs here. There's a little two-legged correction. It's just a failed breakout to trap people most likely, and then because look how it runs straight down after that. So, and we did just come off the highs, so the odds are we're coming back down to the lows. And it just took a little while to move through all the selling before we run back down to the lows. And where do we find support? Same place, right into the close. So we pretty much know on this range day that prices are just going to trend back and forth between the resistance and the support. The key is, how do they get there? That's the part we don't necessarily know, and that you have to be able to read this chart and find the trends and the ranges and the congestion and all that, because even though we know that there's a good chance it's going to trade down, then back up, then back down, it doesn't always go straight down. You have some of this that confuses you and makes you think it's going higher, and it ends up, but where, if you just think about what the rules are, after we come off the high, we should go to the low. And when it starts doing crazy stuff in the middle, tell yourself, I don't know what's going on here because I'm expecting prices to come down here and they're trying to trend higher. So you have to narrow into a smaller pattern to try to trade it, or else you just got to sit tight. And that's what happens to people. You get in, like down here, I talked about the trade down here where I had the circle. It's hard to know what prices are going to do here. If the channel's the right play, then we could go lower, but look at all this overnight support and look at all that support. There's a chance we bounce off that. So it's hard to know what prices are doing here. And guess what? They break lower, trap everybody, and then go exactly where you then show you the range is probably in play. So just remember, if you're not sure what prices are doing, if they're confusing you and they're not doing what you're expecting based on the rules, then sometimes the best move is no move. Just don't take a trade. Just wait until it clears up. I mean, it wasn't long that it was really clear. We had the failed breakout. We spiked up, went into this channel. It was pretty clear then we were headed back up here. And as long as this channel's in play, just keep trading it. Don't overthink this stuff. Too many of you overthink it and you outsmart yourselves. And that's what most of you are doing on these failed second entries. You're just outsmarting yourself. You think you're seeing something and you're trying to trade a trap, and then you can't figure out, you're scratching your head why it failed. It's just because, look, you're trading against people that are very experienced. You're trading against people with 20, 30 years of experience that are good at this. And they're hard to outsmart. You're not skilled enough to outsmart them. So keep that in mind. It's just like you trying to, you might be a good baseball player. You might be able to hit a baseball really well, but if you stepped up into the World Series tomorrow against a professional pitcher with 2 outs, what are the odds that you're going to get the base hit that wins the game? Probably slim to none, because you're trying to hit against a professional that you've never hit against before. Well, it's the same thing in trading. When you step onto this chart and start trying to trade, you're trading against professionals that know what they're doing. And you're not going to outsmart them very often. So don't think when you see some little thing you're outsmarting a bunch of people, because you may not be. You may be getting trapped and outsmarted yourself. And that's generally what happens if you're not a really skilled chart reader. And to be a really skilled chart reader, you not only have to understand this stuff and have been trading it with an understanding of it for a long time. So you might be really good at reading the chart. You might have a complete understanding of it, but you've only been trading for a year or so. Well, trust me, you're not very skilled, because these guys have been watching these charts for, just to give you an example, me, 22 plus years. Compare that to 6 months or a year, or even 3 or 4 years. It's not a lot of experience. And so keep that in mind. This is a skill. And you're trading against skilled traders that can read this chart and understand price movements, and they know all the tricks and they know all the nuances that you don't know because you haven't had time to see them all yet, because it takes a long time of trading to see everything every day, because it changes from time to time. Price action never changes. The rules never change. I mean, you can go back and look at videos I did 10 or 12 years ago and you'll see the same stuff. But Some days you'll get range days, some days you'll get trend days, some days you'll get reversal days, some days you'll get ranges with trends in them, some days you'll get trends with ranges in them, and it just takes a long time to see everything the market can throw at you. It's like a pitcher having 100 different pitches. It takes you a while to see them all and get accustomed to them to be able to hit them. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.